This is the midterm exam review, and it is October 5th, 2022, and we're in Accounting 220B at Newberry College, fall of 2022. And we're going to first take a look at the problem or figure 3 in 3.2, figure 3.3. And we're going to look at the equation that we found back in chapter 2. So y equals a plus bx. That's our total cost equation. And that's an equation in which y is total costs, a is our fixed costs, x is what we're going to end up solving for. That's our number of units. And b is our variable cost. And if you didn't get the, why am I doing it over there? If I do it right here, you can actually see it on the screen. So there we go. For the people watching at home, y equals a plus bx. That's total costs. And if you want to, you can take pictures of this. It doesn't bother me. And we'll have this class. The recording for this class will be posted in Wolf Den sometime tonight after I get back to Charlotte. Okay, so that's our total cost equation. Well, what's our revenue equation? Okay, our revenue equation is just the price times the number of units. So y equals, we'll call it px, okay, price times number of units. That's our revenue equation. And so, as we were studying the chapter, we had the example of the people who were selling the bird baths, and we went into section 3.3, I think. Let me see. Where are those darn bird baths? I've lost the bird baths. Here we go. Here we go. Here's the one with the numbers. Yeah.
What did you say? P and Y?
Oh, P is the price.
Just the price of the good?
Yeah, it's the sales price.
Okay.
Sales price. Yeah.
Thank you.
Sure. No problem. So, let's suppose you have a problem like this, and you have to solve it without the help of a scatter plot to determine, where the various points are and all that sort of thing. And so, okay, let's say we've got the bird bath example, and remember we looked at the diagram, and we had two lines, and this was the revenue line. It starts at the origin with the y and the x axes, right? And then you've got the cost line, the total cost line, which starts up here on the y-axis where? At total fixed costs, right? Okay, that's A. This is your coefficient A. This is your fixed costs. And then it increases at a gentler slope because costs, variable costs are less than revenue. And this is the total cost line. Okay? And what we're going to solve for is this number right here, which is break even. If you're watching at home, I'll try to angle the camera so you can see what I just drew, but it looks just like a very poor imitation of figure 3.5 in your book. Okay, so that's your total cost line, that's break even. So let's substitute the numbers in here and solve the problem. So, total costs, A, we're told, is $18,000. That's fixed cost. And B is $20 per unit in variable costs. So substituting in the numbers for the total cost line, is you've got y equals 18,000 plus 20x. And substituting in the numbers with the revenue equation is pretty easy. It's $100 per bird bath, so y equals 100x. And so the way you solve this equation is you subtract one equation from the other. You did this probably back in middle school math. So you've got y equals 100x, $100 times x. Y also equals $18,000. Well, let's do it backwards. Let's get the same terms underneath each other. So y equals $20 x plus $18,000. Okay, so y equals the variable cost plus the fixed cost. I just reversed these two, but that's, so anyhow, the way that you negate both sides is you put a minus in front of the y, and y minus y is 0. And then when you negate this term right here, you have to use the distributive property to negate both the 20x and the 18,000. So let's take off the parentheses, and we now have negative y equals minus 20x minus $18,000. Okay? So this allows us to get rid of the y coefficient. And we've just got 0 equals 80x minus 18,000. It's kind of an intermediate step. And then what you need to do is get rid of the 18,000 that's negative. And the way you do that is you add 18,000 to both sides, plus 18,000 plus 18,000. This cancels out, and you get 18,000 equals 80x. Everybody with me? Okay, can you see over my computer? Let's see. You're watching at home. Maybe we can, let's put it down over here. There we go. Okay, hopefully you're still watching at home and haven't fallen off the side of your desk. Okay, then how do we solve for 80? Divide both sides by 80. So that cancels and you get x. And you do the math on this and you get 225 units. Okay? Because the dollar signs end up on both sides too. That was dollars, dollars, dollars. Dollars cancels out. You get 225 units. Okay? So that equals x. So you know that your break-even number in units is 225. What's your break-even number in revenue? Well, you just take the number of units and you multiply it, by the $100 per unit sales price. You've got $22,500. Okay. Everybody think they can do that? Okay, good. All right. Excellent. Okay, so that's the first one. Let's go on to the next. Okay, in section 3.3, you may remember that we had the example of the coffee shop that went through a lot of changes and had to do a lot of analyses. And one of the things that they had to do is that they were looking at purchasing a new espresso machine that would reduce their variable cost per unit. And so we went through that calculation in the book, and as we saw, what happened was that if the sales stayed at the same price and stayed static, the number of units sold wasn't sufficient in order for the decrease in variable costs to fully amortize the cost of the new espresso machine. And so it was going to take more than one period to pay for that cost savings with the espresso machine. And that's that was the decision that we got there. And then you had an example in your homework. And this is something I actually want to go through. This is in your homework for chapter 3. And by the way, if you're trying to find this, this is in your course materials. This is in Unit 4 of your course materials. You'll find this particular. Let's see if I'm still logged in. I can get to it pretty quickly. So nope, not. Got to log back in. Okay. Go log in. Look at the coursework. Here's Unit 4, and you'll see the last assignment you have in here is just where I posted the suggested answers to the quiz and the homework for Unit 3. And it's just attached to the end of the assignment in the Step 3. It's just added right here. So you just get it down here, you click on it, and it pops right open for you. And this is open till the end of the semester. So when you go down to right here, and then you unzoom it so you can actually see it on one page, then you've got the example of the Flanders Manufacturing Company that is considering purchasing some additional technology or machinery that will increase its fixed cost by $18,250, but will reduce its variable cost per unit by 15 cents per unit. And so it seems like a small change, right? I mean, it's, 15 cents, there's not much to that. But actually, what we saw here is that small change produced a big difference in terms of their bottom line. So the way that you set this up is you go back and you look at what you had in this analysis, and it's not always going to be just a change in variable cost. Sometimes the investment that you're thinking about making could produce higher revenue because it's going to increase the quality of your product, or perhaps it's going to where you could raise the price in the marketplace, or it might produce higher sales. It might take some sales away from your competitors, or it might build a new market for you to increase the number of your unit sales. And so, but this is a very useful calculation to make a decision that's made in business all the time, which is, should we invest in something that's going to lower our variable cost and make us leaner and more competitive, but also maybe reduce our variable costs, maybe using technology to replace labor while it increases our fixed cost. And so the example that we saw with the Flanders Manufacturing Company is that you were given the sales price per unit and the variable cost per unit, the contribution margin per unit. Well, you weren't given the contribution margin. You had to calculate the contribution margin. What's that? That's the sales price minus the variable cost. And then you were given the old fixed costs, and you were told what the increase would be. So as we just follow our way down the first column here, what you see is that when we calculated our break-even in units. Now, how do you calculate break-even? Well, the formula for calculating break-even is the fixed costs divided by the contribution margin per unit. And this all comes right out of chapter 3. And I really do think it's one of the most useful analysis that you can learn in this course. I mean, this is something, the first one that we put on the board up here, that's something that's, that's a nice trick to know. It's just using your math skills to solve an accounting problem that would take you more steps, particularly in a complicated situation. But this trick right here, this is a way that you can demonstrate mathematically, what's a good business decision. And that's something that you could explain if you were in a job interview that you've learned this skill. So our old break even in units was 140,000 units. That's just $54,000 divided by 40 cents. And then if you take the number of units and you multiply it by the sales price, that's our break even in dollars, and that's 301,000. So, okay, let's go down and look at the monthly contribution margin income statement with the current fixed costs versus the increased fixed costs. And let's stay in the current cost column, the first column. We expect unit sales of 216,000. We've got sales dollars of 464,400. How do we get that? We multiply the units by the sales price. We have variable costs of 378,000. How do we get that? We multiply it by the variable cost per unit. We have a contribution margin of 84,400. With our fixed costs of 56,000, we had net operating income of 30,400. So that's if we just stay what we've been, doing what we've been doing in the past. But what if we make the investment in the new technology? Well, now we go back up to the top of the second column. We've still got the same sales price. We haven't varied that, although we could. Maybe the new technology would give us a higher quality product or take some sales away from our competitors. So it might improve our sales price, or it might increase our expectation about unit sales, which would go down in the bottom part of the problem. But we're going to have to change our variable cost by subtracting 15 cents. So those go down from $1.75 in the first column to $1.60 in the second. And our contribution margin now goes up by 15 cents, from 40 cents to 55 cents. And of course, if you do the calculation on that, that's a pretty strong increase percentage-wise, even if it's only 15 cents. But it's a pretty strong increase percentage-wise in our contribution margin. So then we have to add the additional fixed costs. So now the nut that we have to meet is 74,250 in fixed costs. And so our break even in units is going to be the 55 cents divided into 74,250, and that gives us 135,000 units. So our break even in units went down. So that's good news for us. We don't have to sell as much to break even every month. And our break even in dollars went down. We can, have sales of 11,000 less, almost 11,000 less, and still break even. So in terms of survival, that's a good thing. How about in terms of profitability? Well, let's go ahead and calculate it, the estimated income statement with the increased fixed costs and the decreased variable costs. So the second column starts again with 216,000 units. As you can see, your student here doing this problem in pen probably should have done it in pencil, because I did my calculation wrong at first. But multiplying the 216,000 by $2.15, we have sales again, same number of 464,400 as we had in column one, but our variable costs went down to 345,600. So our contribution margin is now increased to 118,800, and the fixed costs are 74,250 with the increased cost for the new technology. And look at our operating income. Look at our bottom line. We've increased profitability by almost 50%. and that's a pretty dramatic change. Okay, so yeah.
Is the 216,000 given to you, or do you have to solve for that to start that second part?
The 216,000 is given. That's an estimate that you get from sales and marketing as far as what the sales are going to be. And the problem could be set up where you're selling 200,000 units now, but 250,000 after the change, because maybe it gives you better exposure to the market. Maybe it's an increase in advertising, by 50,000, and you're going to get another 50,000 units sold. So that would be a pretty good return on advertising. But anyhow, that's how that works. Yeah, you'll have the givens in this, and then you'll have to do the analysis yourself. So be prepared not only to do the calculations, but also to provide answers as to the significance to the business decision that has to be made. So do we do the deal or do we not do the deal, and then provide your reasons for that based on the analysis that you do. So that's that. Okay, that's the second problem, and then for a third possible problem, we've got, let's see what section that is, cost per equivalent unit. And if you go to section 5.3, I mean, there's a lot of stuff in here that's really hard to do in 50 minutes to actually do one of the calculations that's a long worksheet calculation. And this is an example of that. So just be familiar with the steps in determining equivalent units. I've got a couple of choices on how to test for this. One is to just kind of go through the first 2 or 3 steps in determining cost per equivalent unit, or perhaps start with a given where you've already gotten the total units to account for, and then maybe you calculate the conversion units, and then you determine cost per equivalent unit, and then you allocate it, and maybe do the journal entries. But I don't think I can give you the whole production cost report and expect you to calculate that in 50 minutes. That's a little too much work. So I could give that to you and have some blanks and have you fill in the blanks.
What are the first 3 steps we're supposed to know?
Oh, okay. Well, let's go through that. Yeah, let's go through that. Okay. We just did this a couple weeks ago, but in step 1, this is in process costing. And so the first thing that you have to do in terms of this is, we're going to calculate equivalent units and the total cost of production in an initial process. Now, we're definitely not doing a second process. Okay, that's too complicated. You need to know that for life, but I don't think you're going to get anything like that on the midterm. But the first thing that we do is we have to calculate how many units do we account for. Okay, so you can see that in the first box that's got the gray bar and the we have beginning work in process at 0, and you won't necessarily have beginning work in process at 0, but you'll have units started into production, and that'll equal total units to account for, and then you account for them. How much stayed in work in process, and how much was finished and went out into finished goods inventory, or possibly was sold. So that's the first step. And then you compute the equivalent units of production. And the way you do this is you have 2 pools. You have 2 pools of cost. You've got your material over here, and you've got your conversion cost over here. What's your conversion cost? Well, it's the sum of direct labor and manufacturing overhead. And so you know how many units are in total, and you know how many were completed and transferred out. And so the difference is going to be the number of units that are still in ending work in process inventory. Okay, everybody with me? Okay, all right. So in most of these questions, at least for teaching purposes, we typically have the material units be complete, that we're not adding additional material to work in process. But the conversion units, usually the conversion cost, you get an engineer's estimate or an estimate of a job foreman or machinery operator, that the conversion units are 30 or 40, or in this case 35% complete. And so to calculate the equivalent units of conversion units, you take the ending work in process of 1,200 and you multiply that by the percentage of completion, and then you add that to the units that were 100% complete that were transferred out. And so for material units, you have 8,700 units, but the equivalent units for conversion units are only 7,920, because you have to make that weighted average calculation. That's step number 2. Then what you do is you're given the costs for materials and for conversion costs. And you divide the equivalent units for both materials, which is 8,700, into the total cost for materials, which is 10,179, and you get $1.17 cost per equivalent unit. But the calculation for conversion costs and conversion cost per unit is a little different. You've got 22,176 as your total conversion cost during the period, but you're only partially complete with respect to the ending units, so you have to use your equivalent units of 7,920, and that gives you a cost per equivalent unit for the conversion cost of 280. You add those together, and that gives you your total cost per unit. That's step number 3. And then step number 4 is just calculating how do we assign the total costs to the units transferred out and the units that remain in ending work in process. And so here we do kind of a distributive multiplication to multiply the 7,500 units that were completed times 117 for materials and 280 per labor, and that gives us a total of 29,775 because the units that were transferred out were complete. And then the ending work in process units, we've got 1,200 units for materials, but only 420 equivalent units for the conversion costs. And so that gives us a total of just 2,580 for our ending work in process. And then, you know, if I'm feeling really mean, I could make you make the journal entries for that. But anyhow, this is probably the second or third most useful calculation. I mean, if you go in and begin some type of managerial accounting job, you know, there's very few job shops left that are hiring their own accountants. Usually these are mom and pop kind of companies. But for more and more types of activities in business, we're using process costing because of the heavy influence of technology. And so this kind of a calculation, calculating equivalent units and applying it to the costs, is another really important skill to have if you're looking for a job in accounting with a company that needs this kind of analysis. Okay, those are our 3 major problems, and that's taken up about 30 minutes. Now let me go back through the chapters. I want to go back through chapters 1 through 6 and talk about the areas that are most important in terms of the possible multiple choice question. So in chapter 1, there wasn't really anything that was worthy of a problem, but you should know figure 1.4 in section 1.2 pretty well. That's this colorful presentation of the comparison between financial accounting and managerial accounting. So please make a note of that and be able to explain it or at least answer a question about it. And then also remember the Institute of Management Accounting and the Institute of Management Accountants and their focus on business ethics for the managerial accounting field. In Chapter 2, well, your first problem is kind of a Chapter 2 problem, the cost and revenue equation and cost behavior patterns. But also be familiar with, in section 2.1, the somewhat subtle differences in the accounting structure for merchandising, manufacturing, and service companies. And also the calculation of averaged fixed costs. And this equation, of course, that we're possibly going to use in a problem. And also the high-low method. You know, that's kind of the back of the envelope method for determining a variable cost, just for estimating variable cost with the high-low method. So be familiar with those. In Chapter 3, cost volume profit analysis, which I think is one of the most important chapters that we've studied so far. Be familiar with the contribution margin in section 3.1 and some of the manipulations of contribution margin that are talked about and the equations for calculating contribution margin and contribution margin per unit. Also be familiar with the break-even point and there could be a problem about that. And be able to explain the break-even point with multiple products. So, you know, there may be a multiple choice question that has a large setup that has a question about that. And also at the end of the chapter, operating leverage. Remember we had that homework question about operating leverage. And so be familiar with that term and also the margin of safety term in section 3.5. In Chapter 4, the job order costing section, I don't think there's much potential for a problem there, but be familiar with the calculation of the predetermined overhead rate and how to apply it in a job costing type problem. And then also the job cost sheet, be familiar with that. You might get a fill in the blanks or something as far as a job cost sheet. And then for 4.6, also getting rid of unapplied overhead or calculating the adjustment that needs to be made for over-applied overhead. So if you've got under-applied overhead or over-applied overhead, what do you do with it? What's the adjusting entry? And be familiar with that. And then for Chapter 5, we'll probably back off a little bit because there's probably some good material in there for a problem. But be familiar in the beginning of the chapter, some of the concepts in chapter section 5.1, job order costing versus process costing, how they differ, and then also prime costs and conversion costs, and to be familiar with those terms as well. And there may be a question, even though there may be something about a journal entry that's appropriate in that section. And then in section 6, chapter 6, unit 6, in section 6.2, be familiar with cost drivers. Section 6.3 with activity-based costing. And section 4, I wouldn't expect you to do much as far as comparison between ABC and traditional. I think we've beaten that to death this last week or so. But in 6.5, you've got variable costing versus absorption costing, and that's a pretty important topic. So just be familiar with that. The point with variable costing versus absorption costing is that you learned GAAP accounting if you took financial accounting first, and that was all absorption costing. I mean, for GAAP you have to absorb everything, right? But for managerial accounting, a lot of the techniques that you use are based on variable costing, which might give you a better type of information where you can just calculate things like break even and contribution margin and some of the things that vary based on the variable costs. It's more useful for making management decisions maybe than GAAP accounting, which is more useful to investors as far as evaluating the value of the company and the advisability of lending to it or purchasing shares in it. So just there's different purposes for the different types of accounting, and just the key thing about section 6.5 is just to remember that you're not doing GAAP anymore. Okay, so that's it. So anyhow, those are the possible areas that one, most importantly, would be most useful for you all to remember as you go further in accounting, but two, would be most useful to you on Friday when you're taking your midterm exam. So that's it. I finished 10 minutes early. Who's got some questions? Okay, we all have a nice, oh yeah, Mr. Fairclough.
How is the test going to be formatted?
Okay, good question. Please bring your laptops. Please bring your laptops. However, I will have printed copies available. I know there's one or two people who have told me that they don't want to take it in Wolf Den, that they want to go ahead and write it out. And so we'll have it available, a few copies for that. But my preference is that you take it in Wolf Den because it's a whole lot easier for me to grade it. And also Wolf Den provides a statistical analysis of the answers that helps me in determining if I need to curve it. If I had a couple of times in your quizzes, I've had an answer that was marked wrong as I was changing it around. So that was easy. That just popped right out of the analysis. So I could say, in my first section, all 16 people got the same wrong answer. Well, that's because the wrong answer was the right answer. Okay. So, you all on average usually get, somewhere between 80 and 90% of the quiz answers right. And so if I see something that's an outlier, it tells me that I need to curve it. Okay. So if you can do it in Wolf Den, that helps me.
So
yeah.
it's like the quiz is just more in depth?
Yeah, it's just a bigger quiz. It's a bigger quiz with a couple of, problems for it. So it's going to be the same format like that. Excuse me? Yeah, multiple choice. It'll be a multiple choice section of about 12 to 15 questions, and then there'll be a few problems at the end, and you can just, upload your answers. Yeah, please sign in if you haven't signed in yet.